Remember 2021? Crypto bros were buying Lambos, flexing NFTs, quoting Elon Musk like he was a financial prophet. Fast forward to today, they're buying dividend stocks, reading Warren Buffett quotes and arguing about drip strategies on Reddit. Welcome to Tough Finance, where we drag your financial corpses out of a hype cycle and show you how money actually works. Today roast how crypto bros became dividend dads. Section 1, the rise and fall of DeFi dream. At first it was beautiful. Bitcoin 200k? Easy. Ethereum flipping Visa? Tomorrow. Dogecoin as a global currency? Totally rational. You didn't invest, you gambled on vibes. You joined discourse where 16-year-old promised generational wealth based on tokenomics no one actually read, and then the floor fell out. Terra collapsed, Celsium froze accounts, FTX turned out to be Enron with memes. The dream didn't just crash, it got margin called. Section 2, the harsh awakening. So what happens when you lose 80k pretending you understand blockchain tech? You stop chasing 100x altcoins, you stop trusting Twitter calls, you stop YOLOing your rent money into dog-themed coins, and you start saying weird things like, I just want consistent returns. Slow and steady wins the race. Maybe Warren Buffett wasn't an idiot after all. Congratulations, you just graduated from crypto gambler to dividend investor. It's like financial puberty, but way more humiliating. Section 3, why dividends feels like magic after crypto. After getting wrecked by volatility, you know what feels like sorcery? Getting paid every quarter by real companies that exist, with customers and products that aren't JPEGs. You buy a share of Coca-Cola and boom, you get a tiny check. No staking, no rug pulls, no Discord mods named crypto-to-dividend, just old school capitalism bleeding out slow cash into your account. Section 4, how dividend investing actually works. Here's the no fluff guide. Buy shares of companies that pay dividends. Think Johnson & Johnson, Apple, Procter & Gamble. Reinvest those dividends automatically. That's DRIP, dividend reinvestment plan. Watch your holdings and payments grow over time thanks to compound interest plus corporate greed. No promises of 10,000% API. No new blockchain protocol garbage. No waking up at 3 AM wondering if your wallet got hacked. Just steady, boring compound growth. Boring, yes. Profitable? Also yes. Emotionally stable? Shockingly yes. Section 5, why it was always about cash flow. Here's the real lesson. You didn't want to get rich fast. You wanted freedom through cash flow. Crypto promised it through magic internet money. Dividends actually deliver it. Slowly, predictably, legally. True wealth isn't flexing a Lambo at 23, it's sleeping well at 40 because your investments pay your bills. The goal was never moonshot, it was escape velocity. You just took a few detours through Shiba Inu and heartbreak. So welcome home, crypto survivor. Your diamond hands are now holding blue chip stocks. Your Lambo dreams are not fuel efficient sedans. Your serotonin comes from quarterly payouts, not price charts. This is the Tough Finance. Stay cynical, stay solvent, and remember, slow money is real money. Fast money is usually just faster bankruptcy.